central banks are now gradually moving the dollar reserves from US dollars to gold, physical gold, and taking it, storing it at home in their country, not with the in New York or in London with the central bank. So that will put tremendous upward pressure on the gold price. And that, I think, will lead to eventually that gold's going to go up by multiples, as we have talked about before. Not just by a few $1,000s, but by multiples. Just like when gold breaks, silver will, of course, move at least twice as fast.
Egon von Greyerz, founder and managing partner of Matterhorn Asset Management, highlights that Russia is the third largest gold producer, with Australia likely in second place. Both nations, he notes, are keeping their gold reserves instead of selling them, recognizing the value of gold more than ever as they witness the West, particularly the US, erode the value of paper money. In 2024, central bank gold purchases played a significant role in boosting prices, with October marking the year's highest net buying at 60 tons. The Reserve Bank of India, RBI, led the way, adding 27 tons in October alone, bringing its total purchases for the year to 77 tons, a five-fold increase compared to 2023. Turkey and Poland followed closely with 72 tons and 69 tons of gold bought, respectively. Greyerz predicts that the ongoing shift by central banks from dollar reserves to gold will drive sustained demand for years to come, pushing gold prices significantly higher, not just by a few $1,000s but by multiples. This central bank demand is expected to far exceed that of smaller investors. In October 2024, gold reached an all-time high of $2,790 per ounce, a surge likely to continue into next year. Experts attribute the ongoing demand for gold, a key safe haven asset, to geopolitical risks, central bank buying, and the U.S. Federal Reserve's shift to a rate-cutting cycle. Gold ended 2023 around $2,062 per ounce and reached $2,620 by December 2024, marking a 27% increase, the strongest return on gold since 2010. Over the course of the year, gold broke records 40 times, with total demand surpassing $100 billion for the first time in the third quarter of 2024. After peaking in October, gold ended the month at $2,743 per ounce, up 4.15%, solidifying its position as a top-performing asset. Before we dive deep into this video, make sure to subscribe to our channel and hit the bell icon so you never miss any of our updates. Also, share it with your friends and anyone who might benefit from it.
Today, China, for example, from what we understand, is that when they are the biggest producer of gold in the world, near 400 tons a year, and they keep that gold themselves, the Chinese government now. So that is actually fresh gold that they keep. So it never goes onto the market. It means that it never affects the price. They produce the gold and they keep the gold. And also my understanding is that Russia does the same. Russia also, which is really well, I think it's the third. So I think Australia's second or Russia's third. It's about the same, the biggest gold producer. And they're also keeping all of their own gold. They know that. They understand the value of gold more than ever because they see what the West is doing and they see what the US is doing, destroying the value of paper money. And therefore, they're keeping their own gold also and building up the reserves. So that never comes onto the market either. Then we have, of course, we've seen a lot of central banks, BRICS, Eastern central banks and BRIC members, not Western central banks, buying gold. Western central banks are not buying gold at all. They haven't bought gold for decades. But the Eastern ones are. And, central banks, when they're buying gold, they're very cautious, so they don't want to push the price up. So they are very carefully going into the market to pick up gold without putting upward pressure on the price. As I have said before in our discussions, Jan, of course, you also have this move now from dollar reserves. Central banks, after that, the US confiscated the Russian assets, which were obviously mainly dollar assets, then no central bank will trust the US to hold their reserve assets, as I said, which are primarily in dollars. So therefore, central banks are now gradually moving the dollar reserves from US dollars to gold, physical gold, and taking it, storing it at home in their country, not with the in New York or in London with the central bank. So that is a ongoing movement that's going to take several years, but that will put tremendous upward pressure on the gold price. And I think we're not talking about here small moves. We're talking about sustained. There will be buyers of gold continuously for many years in the form of the central banks selling the dollars, buying gold. And that, I think, will lead to eventually that gold's going to go up by multiples, as we have talked about before, not just by a few $1,000s, but by multiples, because there will be sustained demand from a level, as at a central bank level, which will certainly outcompete all small investors. What normal investors do will be irrelevant in comparison to these major buyers of gold being central banks, and especially the BRICS and Eastern and Southern central banks. That is a very important move that will take place over many years, as I said. So that will support gold for a long time. Plus, of course, the other support is that the Western economists and countries will continue to destroy the value of their money by printing more and more because of the debts going up now exponentially. And that in itself, of course, will mean that paper money will go down in value, which means gold will continue up. So those are major forces, Jan, that will mean that gold is going to be one of the best assets to hold, not just for wealth preservation purposes, I'm talking about physical gold, of course, but also for wealth enhancement purposes.
Egon von Greyerz predicts that a few strong buys and significant short covering by bullion banks could trigger a dramatic rise in silver prices, possibly as early as the first quarter of next year. While silver is poised to increase, Greyerz cautions that it remains much more volatile than gold. Silver emerged as the most exciting asset in the commodities sector this year, and analysts expect the gray metal to outperform gold again in 2025. According to TD Securities' 2025 Commodities Outlook, silver's performance will be driven by tightening supply and rising demand, particularly from the recovering economies of the United States and China in the second half of the year. This increased demand is expected to absorb excess inventories, which had built up following China's economic slowdown. TD Securities analysts project that silver could average $36 per ounce in the latter part of 2025, solidifying its position as a top-performing commodity. They also note that the gold-to-silver ratio is likely to approach yearly lows. Additionally, the new Trump administration's approach to the Inflation Reduction Act, climate policy, and tariffs on Chinese products containing silver will play a crucial role in shaping the metal's market performance. With supply tightening and demand set to rebound, silver is on track to be a standout in the commodities market in the coming year. Let's get back to the interview.
There are, I think, major short positions in paper silver among the bullion banks, and obviously you especially have the big American banks there. They are desperate to hold the silver price down, because if that market breaks, there'll be no end to the amount of silver they will have to buy to settle these forward contracts or these derivative contracts that are open. And therefore, they're at every level, they're trying to hold it now. We're holding it around just over the $30 level, for example. But, when it breaks, just like when gold breaks, silver will, of course, move at least twice as fast, maybe even faster, 3 times as fast. It's a very small market, from a volume point of view, and therefore, a bit of strong buying and a lot of short covering by these bullion banks will mean that silver could go up dramatically when it starts, and I would expect that to start also probably in the first quarter of next year. But as I always said, silver is, it is an exciting metal, and it will rise in price, substantially. But it is much more volatile than gold, so people should be careful in not having too much silver, and certainly not buying it high, buy it when it's cheap. Buy it, for example, now. Don't wait until it gets to $40 or $50, because that will be too late. Well, it won't be too late, but go higher. But then there'll be a correction, and people get nervous and sell in the correction, and then they won't buy it back at the right time. So just buy it when it's low and nobody wants it. As I say, when it's unloved and undervalued, that's when you buy it, and then you just sit on it, and you will see silver substantially higher. But I think investors should have more gold than silver because of the volatility of silver.
The outlook for both gold and silver remains bullish, driven by a combination of central bank buying, geopolitical risks, and economic recovery in major global markets. Gold, with its role as a safe haven asset, is expected to continue its upward trend, while silver, with its volatility and potential for rapid gains, presents an exciting opportunity for investors in 2025. The shifting dynamics between dollar reserves and precious metals will likely shape the trajectory of both markets in the coming years. What strategies should investors consider as central banks continue to stockpile gold and silver in the face of increasing market volatility? Let us know in the comments. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more insights. Thanks for watching.